Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 23rd of June. All right, now plenty going on in the markets with the three central banks raising rates. The Bank of England surprisingly by 50 basis points, and then you've got the Swiss National Bank and the Norwegian Central Bank there as well, all raising rates. Now, the dollar is a little bit higher, and the news services are attributing that to like a risk aversion, right? All these central banks raising interest rates, and not just these ones, you know, the RBA, and a few others. Bank of Canada look like they're going to raise again. That global growth is going to drop off. Well, yeah, it is for sure. But the whole reasoning around this is a little bit, this is where sometimes the news services get a little bit liberal with what they're saying. So they're saying like the dollar's bounced back here. Now, it is still on this downtrend. But you know what? If there was a risk event on, gold would go up, not down. So to me, they've been a bit liberal with what they're actually saying. I think, and this is what they usually say, okay, like the dollar's climbed on risk aversion. They say that when they're not really sure what the hell is going on. Now, let me just give you a look at the impact here of the sterling, right? The Bank of England surprise interest rate hike by 0.5. Now, I had quite a few traders contact me yesterday and ask for suggestions what they should do around the Bank of England interest rate decision. My answer, stay away from it, right? It's going to be so messy. There was always a possibility, I thought a small one, that they would raise by 0.5%. But you know what? The statement, the press conference, because of the CPI data, and then the really strong CPI, then the weak PPI, and the overall outlook on the data, it's very confusing, right? So, and what you saw is basically from the point of the release, you get a 60-point move to the top side, a 100-point move straight down, and then it starts trading normally. Now, this price action here is what you're trying to avoid. Now, you might look at this chart and go, yeah, that's easy. I could have bought some here, sold them up here, and vice versa. It doesn't work like that because the liquidity is not there. So you may have put an order in to get set here, and you know what? You're done at the high, and then you kick back out on a stop loss as it goes lower. So when there's a convoluted central bank announcement coming up, you've really got to stay out of the way. Right, that's what most professionals will do. And that's why the price action is like this, because everyone's standing back and going, you know what, we don't really know what they're doing. We need to hear what they've got to say. And that's when things start to line up again. So hopefully a bit of a lesson there for most traders. Now, if you bring this 1 minute chart back into the hourlies, you start to get a bit of an idea of what's going on in sterling, right? And to be honest, this was just a massive flush out. Okay, now we're back sort of trading. The central bank, well, the Bank of England is going to be looking at the data coming up, obviously, like most of these central banks. If it's strong, they raise rates. If it's not, if it's weaker, inflation's falling and the unemployment's rising, well, they'll probably stay on hold. But that's, you know what, it's just one of those events you need to learn to avoid, not to get caught up in. So with the whole situation here, right, now, you can see here the dollar Swiss move there on the interest rate announcement. Now, they just raised by 0.25 as expected. But even still, take something out of this, that around these central bank announcements, it's when liquidity will be at its worst, right? It's very hard to trade these events. Here's two events here that will highlight to you how tricky it is to trade these events. So don't start licking your lips thinking, oh, great, I'm going to trade these events and make loads of money instantly. Right? If anything, you're going to get carved up, and it's an absolute mess. Now, what we need to be doing is sort of working out what's going on. And I think we've got discombobulated markets at the moment, right? Euro's coming back to a good support level. The trend is still up. The dollar is still sort of heading down. It's coming up to a nice level here as well. Dollar yen still moving topside. Well, dollar Swiss, okay, it is sort of drifting lower. It's coming up towards a resistance line there as well. Sterling now drifting sideways, Aussie's going down, and Kiwi sideways. Now, there's so much different activity and anticipation of what the central banks will do. When you see definitely the Euro, Sterling, Aussie, Kiwi, now these pairs generally trade together. And at the moment, they are pretty much all doing something different. This is like a buyer beware situation where you need to be focusing very closely on each instrument and trading it for what it is. The correlations are not there at the moment. So this is, it's a little bit trickier. It's not as simple as just running in and buying Aussie because euro's going up, right, etc. So the and this is what we've got. So we've got these tricky markets. So then you come back to where, let me just bring you back over to the sort of the data page here. You look across the global instruments, right? And we're looking for some sort of normality, especially after a big day where 3 central banks have raised interest rates. The US equity futures, okay, they are down, which suggests a risk-off situation. Now, these 4 pairs here should be going down if that's the case, and the dollar up. Are we seeing that? Well, the dollar is going up, but there's a bit of a convoluted, as I said, Euro, Sterling, Aussie, Kiwi aren't working together. So you just need to be aware of that, because if you're trading one off the other around the correlations, then you're going to get a little bit chopped up. Now, for those traders looking to learn a bit more, take the time to go into the Bank of England and actually read what they were saying about why they made the decisions. Okay, they spell it out for you in the statement here, and there's also some minutes you can actually go through as well. That's a very good piece to really get some more understanding around how the central banks enact policy. Now, let's just come over to the actual data that we're expecting today. So we've got UK retail sales figures, right off the back of the central bank. Now, these are the first numbers. If we get significant variance here, you should start to expect some sort of movement of the strong or weak in sterling, right? They are the first number after the central banks just told you exactly what they're going to do. So stronger numbers here. I think you'll start to see sterling move to the top side. And it's not going to be as aggressive as the Bank of England release. But just be aware, it's like sometimes these releases can come out so close to the raw nerve, which is the Bank of England rate decision, that the market's sort of desensitized and almost had enough. But I think in this situation, we might see a chance here for these numbers. As I said, if they are significantly different to the consensus numbers, and look at the consensus, the numbers are generally pretty weak, right? Which makes you beg to ask the question, why did they raise rates? Well, they're just trying to protect and solve the inflation problem. But it's obviously got a lot of tangibles. The retail sales figures, I tell you what, if they come out massively weak or weaker, then it really is a slap in the face to the Bank of England. Should see sterling off, and there'll be a lot of negative comments about the Bank of England and what they've done, right? We're seeing that across a lot of central banks, the Fed, the RBA, they're all getting kicked in the teeth for raising rates based off their inflation expectations when some of the key macros are really starting to fall off the map. Now, one thing that's actually just coming back up here, we did see now oil. Actually, let me just come back to the charts, because I think this is where we might be able to piece together a decent trading opportunity for today. Oil, with the recent rate rises, right, has really sort of come back, okay? And we are starting to see this impact, because if I just change the chart here back to the currencies, and if we're having a look at the value of oil here, which is really sort of dropped dramatically, okay? And you've got dollar CAD just drifting sideways. We need something to spark here, because I can't see anything stopping dollar CAD starting to follow oil, right? It's like, how many dollars? It's like $3 or $4 it's fallen overnight. So will dollar CAD follow? Maybe. Wouldn't it be great if we had some economic numbers coming out to suggest that? And I had a look around. I mean, there are some on most calendars, not on Metastock actually. We've got the prelim manufacturing sales and wholesale sales numbers. Now, these are well-respected Canadian numbers. If we get much weaker numbers here, right, it's going to support a stronger dollar CAD, which goes with that oil trade, right, which should push dollar CAD to the top side, right? And don't forget, if anything, if there's this risk aversion, which is a real thing, then you should see the dollar rally anyway. Those weaker CAD numbers will support that move, and oil is also up here as well. So to me, dollar CAD's on the radar for sure, right? The all CAD crosses, but to me, it's sitting there and trying to work out what it should be doing next. And that's where those numbers can come into play. Outside of that, well, there's nothing really else coming out. If I just bring you back to the main page here, I did see that Christine Lagarde is due to speak, the ECB president. Okay, if I just get you back over here. right? You got the data there. It's actually just a central bank panel, central bank event. But if there's any sort of Q&A, they won't be asking her about what she's speaking about. They'll be asking her about interest rates, maybe about what the Bank of England have done or anything else. It's just one of those left field events that you just need to be aware that there's something on, right? And then you've got a few other bits and pieces, but nothing seriously that's going to like dramatically impact like a central bank announcement. So keep an eye on the data flows as it comes through. There's a lot to digest. What you're generally looking for to come back into the markets, and this is what traders generally do, is they line things up. Like if this is down, do we have a normal risk off day? And at the moment we don't, right? And outside of that, depending on which instrument you're looking at, say we're looking at the Canadian dollar, we'll have a look at how the CAD is performing against a range of different crosses. It may be easier for you to isolate exactly which ones you should be focusing on. Okay, now the CAD yen is up 5.2%. The CAD's up 3.2% against the dollar. So you can see these ones are a little bit stretched. We get the data reversing that. You're going to see a nice big ricochet in those pairs. And that's how you can really line up the various components of a trading opportunity. All right. Is there anything else to tell you? Let me just have a look across the board here. Actually, let me just give you one last look. Which page is that? This one here. Okay, so just having a look at the CAD sort of risk reversals and implied volatility. Not a lot to really sort of go off there. If anything, calls versus puts, yeah, pretty evenly balanced. Implied volatility, well, it's dropped off a bit. So they're not expecting a huge amount of activity in CAD, and that's sort of good. That makes you think, well, you know what? I've got an opportunity to trade here, something that isn't going to be crazy volatility. It gives you confidence to go in with a more regular trade size instead of halving it. And that's where the opportunities can come from, right? So those S&P global manufacturing numbers in the States, there's always potential for something to come into play, and the market will be sort of clutching at straws. Don't forget Friday, it's like the last stop saloon, right? This is where traders who have lost money come into the Friday and try and trade aggressively to make their cash back. I tell you what, it's a bit of a graveyard for cowboys, that's for sure. All right, guys, that's it for me. There's plenty going on. I mean, lots to digest as far as central banks. To me, the market looks a little bit like unclear. As I took you through the major currencies here, they're not exactly lining up as they should. So just be aware that's not normal, and you may have individual trading opportunities based off specific pairs. Like you can see sterling here falling against most things. Same with euro. But just isolate the instrument first that you understand, then go chase the opportunity from there. All right, guys, have a good one. All the best. Cheerio.